Hello traders, welcome back to another weekly watch list video. So finally we got our CPI data last Thursday, and overall CPI rose 8.2% year over year last month, down slightly from a clip of 8.3% in August trading. Stripping away volatile food and energy prices, so-called core CPI accelerated by 6.6% year over year from 6.3% in August and 5.9% in July. Now, taking CPI as a lagging indicator along with the signs of economic cooling, it's evident that the Fed will target to raise the interest rate close to 4.5% to 5% at the end of this year. If you observed last week's trading activity, then you must have noticed that there was no liquidity. Bid and ask were too wide apart and provided very little trading opportunity. Now, Thursday was a classical bull trap day as the market soars after getting the CPI data, but on Friday bears come back to take control of the market, pushing it down while eroding all of its Thursday's gain. Now, overall market sentiment is still bearish, and today's video will be the shortest one as I couldn't find stocks that has a decent setup to take a trade on. Most of the stocks and indices are showing more sideways action or testing some of its critical support levels. So based on the market activity, I can say that we are going down from here, but I prefer to stay patient rather than taking trade based on emotion. Now in this video I will be just covering Nasdaq, SPY, dollar and the week, so we will wrap this video pretty quickly. So starting with the Nasdaq gained almost 500 points on Thursday as CPI came out and gave back all of its gain on Friday. It's inch away from its all-time low, close to 10,668, and it is around like 10,744. So if we crack below this level, then there is nothing in between to stop it from coming down to around 9,798. And if you want to remain a little bit optimistic in that, then you can say that 10,172 will be the first target and followed by the 97.98. Now there are three scenarios possible in this case. The first scenario is like it will trade sideways between this range of 10,000 to 10,500, or it can retest this retest this previous low around like 10,668 and push back higher to retest 11,772, which is at 0.382 retracement from its recent downturn. If that doesn't happen, then there is a third case scenario, is it will break below this current level, below this support or recent low from 10,668, coming down to retest this 10,172, push back higher, retest this level once again, and then come down even sharply. So these are the three scenarios possible in case of the Nasdaq. Most probably I will see an upshot to 11,772 as we are close to our next earnings season. So just keep that in mind that this period until it start picking up the direction, this will be the volatile and the choppy one. Moving on to S&P 500. So similar to Nasdaq, all those three scenarios applies to S&P 500 as well. The first scenario is trading sideways between the range of 3,500 to around like 4,000. That 4,000 will be the optimistic level, but close to 37.98. And the second scenario will be it will retest this level once again, 35.22, and push back high to 38.37, which will be the 0.382 retracement of this recent low. And the third scenario, as Nasdaq, it will break down below 3,500, retest 35.22 followed by the 33.93. This will be the bearish scenario, but there is a catch. Now if you look at the options activity, if you have any options tool that can give you the flow of the market is heavily leaning towards the 340 strike. If that happens, then it will retest this lows and followed by probably retest of this 320 level. But in that case, if it come down to 340, that will be the extreme, and then probably it will give another rally back up close to 3,500. Moving on to dollar. Now dollar is becoming weak, a little bit weaker, and it is losing its strength a little bit, not by much. So what happened on Thursday, that it tried to break above its recent high of, let's say, 114. It tried to reach to that level but failed around like 113.98 or something, and then it pulled back a little bit, gained back up on Friday close to 113.298. So we need to watch if it can break above 113.50, followed by making all-time high around like 114. If that doesn't happen, if it pull back, then the first level to watch for is 111.78, followed by 110.579. Based on the conditions of its recent price action, as it is in the double top formation, I think it will probably come down to retest somewhere around like 110. That will give us that anticipated push or the short-term bear market rally in the stock market. And the last one is VIX. Now VIX is a little bit interesting over here, as it is forming this rising wedge formation. Now it made this rising wedge formation, broke above it, made a mid recent high around like 35, then pulled back to its recent lower trend line of this rising wedge, push back higher, couldn't break above 35, pull back, and probably it will stay within the range of between 32 to 35 for a while before picking up the direction. Now if it broke below 32, then the next level to watch for is close to 30, around like 29.84, followed by the 27.95. now this scenario, breaking down scenario, is most likely applicable in this case because we have the earning seasons upon us, and if you have the option to give you the option activity, if you look at the VIX options activity, most of the market is leaning towards the 40 and 50s. Now that's very extreme case, like probably it will retest these levels around like 41 and 44, but that's the extreme case scenario. I'm really not sure if that's possible, but in short term we might see a pullback towards 27.94. well, that's it for this video, guys. If you like the information presented in this video, then please like, share and subscribe. Thank you for watching, and see you next week. Bye.